Good afternoon, everyone. I think it's just gone 12 o'clock. My name is Ben Larkin, the chairman of Albion Development VCT, PLC, and it's my pleasure to welcome you to the company's annual general meeting. I would like to introduce my fellow directors, Lynn Golby, who's the Audit and Risk Committee Chair, Lord O'Shaughnessy, and Patrick Reeve. Also present is Will Fraser-Allen, the Managing Partner of Albion Capital, the company's investment manager. Will shortly give a presentation on the results of the company for the year ended 31st of December 2023. Moving on to the formal business of the meeting. The quorum for the AGM is 2 members entitled to vote in person or by proxy. I can confirm this has been met, and therefore I declare this AGM open. The notice of the meeting has been in your hands for the statutory period, so I will take the notice as read. Due to the success of the previous year's virtual AGMs and to maximise engagement with our shareholders, the board have again arranged for the Lumi team to broadcast this year's AGM using its online platform, which enables members to interact fully, including taking part in a questions and answer session and voting on the board's proposed resolutions. Before I hand over to Will for his presentation, I would like to explain how the voting process will work. But let me first state that if you have already submitted a proxy vote to the registrar, you do not need to vote again unless you wish to change your vote. The resolutions will be voted on by way of a poll. The votes received under this process will be added to the proxy votes that have already been received and verified by your independent registrar Computershare. Once I declare the poll open on the Lumi platform, a list of resolutions will automatically appear on your screen. Please select the option that corresponds with how you wish to vote, and the option will change colour and a confirmation message will appear to indicate that your vote has been cast and received. To vote on all resolutions displayed, select the Vote All option at the top of the screen. If you want to change your vote, you have the option to reselect your choice. Should you have any questions at all on the voting procedure, please send them through the platform and someone in the Albion team will respond promptly. Excellent. I now declare the poll open. Turning to the main business of the AGM. Following the manager's presentation, the directors and the manager will take questions from members on the company's financial results and proposed AGM resolutions. I would like to thank members who have already submitted their questions and queries through to the chairman email address. If you wish to ask questions, please select the messaging icon from within the navigation bar and type your question at the top of the screen. Click on the arrow icon to the right of the text box to submit your question. Please do so as soon as possible so that it reaches us ahead of that section of the meeting. I will now hand over to Will Fraser-Allen for his presentation.
Ben, thank you very much indeed, and a warm welcome to all our shareholders who are watching this, and thank you for joining us. So, as Ben said, I will be taking you through the results for Albion Development VCT, and that's covering the year to December 23. So, if I turn to the next slide, just like to start with sort of the key headlines, which are that we ended our year with a net asset value of 88.7p, which brings our total returns, that's when you add the current NAV to dividends paid to date, to 206.78p. And encouragingly, that represents a 5.14% return for the year. In addition to that, and in accordance with the company's dividend policy of paying around 5% of NAV, a dividend was paid of 4.51p. But if we move to the next slide, we're sort of setting out the context in which these results were delivered. And as all of you will know, we continue to see quite a tricky world around us, whether that was the macroeconomic outlook, but also very much the uncertainty caused by the geopolitical situation. And I'm thinking particularly of the ongoing war in Ukraine, the events in Gaza, and indeed general political changes throughout the globe, including the UK. However, against that, we have seen inflation coming down, and the latest numbers are encouraging in that respect. But equally well, interest rates do remain high, and there are somewhat mixed views as to when they will come down. But importantly, they are the general consensus is they will come down, which will be positive for the types of assets that we manage, specifically companies exposed to technology and healthcare. We do continue to invest in those companies which have products or services that are mission critical to their customers, i.e., they're likely to renew their contracts and they will sign multi-year contracts because they are mission critical. As I'll come on to at the end, when I look at give you a taste of the first quarter, we are encouraged by the early signs of 2024. So if we move to the next slide, let's put our performance into a longer period of time. So over 1 year, we've delivered that 5.1%. But with a venture portfolio, it's more relevant to look at longer periods of time because by its nature, there is volatility. And what we're looking to do is to deliver long-term returns through those cycles that give rise to that volatility. So in that context, I think it's encouraging that we, over 10 years, we have delivered an average return of 8.1% per annum. And that is in the context of looking to pay an annual dividend of 5%. Importantly, that number does not include the benefit of any upfront tax relief, which those shareholders who are able to claim it will have in addition. So on the whole, encouraged by our return in what was, as I've set out, not the easiest of years. And what I'd like to do as we go through this presentation is explain how we've delivered that. But turning to the next slide, picking out some of the highlights. Fundraising each year is an important part of building the portfolio and making the company larger to defray costs over a larger asset base. Fundraising here is we raised 7 million this year, which looks rather lower than the 26 the previous year. But it's important to explain that in 2022, because of the timing of the fundraise, there were actually fundraisers across 2 tax years in that year. So it's really a timing difference in terms of how much was raised. Exits, it's well documented that M&A activity generally is somewhat down. We were not immune to that, but despite the tricky M&A environment, we did manage to deliver 5.3 million of exits, and that was driven by the sale of Ophelos, and we sold a small portion of our investment in Quantexa. Investment rate was down last year. That very much reflected the broader investment environment, which saw considerable caution in the context of quite a tricky world. So 6.9 million down from 15 million. On that note, as our investment rate has stepped up again in the current year as confidence returns. And I think that's an important theme. I just want to bring out that there is confidence returning. So we are seeing entrepreneurs on whom we depend to create the businesses that we back are very looking at how they can raise money to grow those businesses. Share buybacks, very similar year on year, particularly when you consider the increase in size of the overall company, and dividends is very much following that formula of 5%. But let's go on to the next slide and dig into a bit more detail, looking specifically what has driven that just over 5% return in the year. And the big standout item is Quantexa. Quantexa is the largest investment in our portfolio, and it raised during the year what's known as an E round fundraising, and that was backed by a Singapore wealth fund GIC, and the valuation put Quantexa into the unicorn territory, i.e., valuation in excess of $1 billion. and it was indeed the first unicorn in the UK of that year. So very, very encouraging that that company continues to attract the interests of very, very credible international investors. Egress was traded strongly, and we saw an uplift from that. And I'll talk a little bit more about egress later in this presentation. However, we are managing a venture portfolio, and against the successes, there will inevitably be those companies that don't do and don't perform as we would like, particularly in a trickier macro environment. And that was very much the case for Black Swan and to an extent Threadneedle, which is Threadneedle software. Elsewhere, there were a number of ups and downs. We've picked out some of them for these slides. And if you want to dig into detail, they are all fully listed in the annual report. So if we move on to the next slide, just sort of touching on the portfolio, and this is really just trying to give a bit of flavor as to how the portfolio is positioned in terms of maturity. So the argument is that we look to invest in young companies, but those companies grow over time such that we create a portfolio that is diversified across maturity, so and size, but also diversified across the subsectors of technology and healthcare, which we focus. So if we look at that split initially by sector before we move on to size, you'll see it's very similar. We're moving in a general direction where the significant part of the portfolio is in our core target areas of healthcare, particularly digital health or health tech, if you like, and software more generally, including fintech as a subsect. And elsewhere we hold cash, which allows us to make new investments. And then we have a really quite a small element that is invested in some of the more historic areas that we invested. But the portfolio itself now 63 companies, so that's diversified by a number of companies. And importantly, given the objective, the public policy objective of VCTs, we are now employing 4,500 people, predominantly in the UK, and those will typically be highly paid, highly skilled jobs. Moving on to the next slide, we can dig into the portfolio in looking at it in terms of maturity, and we look at this both in terms of the revenues, i.e. those companies that have higher revenues being larger, and similarly the number of employees. And this is quite interesting how this has developed, that if you look at the extent to which a portfolio is invested in companies with revenues over 5 million, that is now sitting at 80%. So you can see that by value, the portfolio is focused to the larger end of the businesses, as we have seen a number of our companies grow. And I'm going to talk you through the top three as I do normally, just to show you how that works in practice with the biggest investments in the portfolio. And then when you look at numbers of employees, you get very much the theme that the number of very small early stage companies, less than 20 employees down to 3%, 21 to 50, 12%. So yes, we are invested in young companies, but by value it's relatively small, but it is still very important because it is those companies that we invest at the young stage and then continue to invest as they grow and thereby deliver shareholder value. Turning to the next slide. I referred to the top three. If we do what we are supposed to do, which is to back those companies that become outliers, you will, in a venture portfolio, have a concentration amongst the larger companies in our portfolio. So as shareholders, it's important that you understand this, and worth just reflecting on the top three companies, which is Quantexa, which is our data analytics business used amongst sectors, particularly large global banks, and they use their data analytics AI driven to detect financial crime. And as you can see, that is now has a book value of 22 million, some 10 times the cost of our investment. And if you add the three investments together, which Quantexa is the largest, those top three do account for 35% of the portfolio. Second company being Egress, and I will come back to Egress, which is our email encryption and secure digital exchange business that is growing nicely, particularly in the US. And then Pravica is our children's medicine business, which has seen good progress in the period as it launches new drugs. And we see the pipeline of drugs becoming a portfolio that's actually in the market, generating revenues across Europe. So three companies that we're proud to hold, and delighted to have been able to support the management teams that are building them. Turning to the next slide. New investments, important to refresh the portfolio and deliver the outliers of the future. And I'm going to cover the first two, Open Dialogue and GridCog, in a bit more detail. But just if we look at the sort of areas we're focused in, it does very much sort of mirror where our focus is. So we are looking at sort of business, enterprise software in the form of Open Dialogue. I think is Mondra and GridCog I'll sort of pull out, which is really investing in an emerging theme within the portfolio, which we call climate tech, which is how do we use software to assist the move to the energy transition, the move to net zero. So Mondra, for example, is looking at global supply chains, particularly into the large groceries, helping those customers understand their supply chain from an environmental perspective. Phasecraft is in our again a sort of emerging theme within the portfolio, which is to invest in deep tech. So these are big ideas that can make through scientific research can make huge differences. And Phasecraft is developing software specifically around the algorithms that will look to capitalize on the enormous increase in computing power that quantum computers will be able to deliver. And then finally, Quebec sits in our interest in fintech, and this is allowing alternate debt fund managers better run their back office and systems. Moving to the next slide, we'll just pick up on those first two with a bit more detail. Open Dialogue, there's lots is being written about the growth of AI, generative AI in particular. And the way we look at it is that this is a great opportunity to back businesses that can use AI to deliver a particular business model, or indeed within our portfolio, improve their products. So Open Dialogue is in the whole area of, and the very obvious area where generative AI can have an impact, which is in supporting customer service. So automating elements of customer service. And what Open Dialogue are doing is they're making AI, generative AI, accessible to a whole range of companies by making it easy for those companies to implement it. So we invested 5 million across all the Albion VCTs, of which just under 1 million came from this fund. Importantly, we backing repeat founders, i.e. the management team have built companies before, and specifically a business called Autonomy, which was a successful exit to Blue Prism Group. Next slide, please. GridCog was the second of our climate tech investments. So this is a company that helps large corporates manage the practicalities of moving to net zero. So this might be a large corporate that's managing electric vehicle fleets. It might be looking at how do we bring solar panels into play, how do we use wind, how do we use, and the list goes on. Very complex planning, very complex to manage, particularly at scale across large global businesses. And this is a software platform designed to assist with that, both in the planning of future initiatives, but also increasingly monitoring those initiatives once they've been put there. So again, repeat founders, this time from GreenSense and LimeJump, both of which acquired by Shell. And our investment, a smaller investment here, which was 3 million across the Albion VCTs, 500,000 from development. So as we talked about before, this is relatively modest first investments, but with a plan to back business plans which will require further funding as we build our confidence in those companies. Next slide, please. Important part of that journey of growing shareholder value is to continue to support our companies as they grow, and in that vein, we supported Panacea, Pravica, and Selden in the year. Next slide, please. Investment strategy. I think I probably touched on this, but we continue to focus our investments early stage, often early stage, but can do a little later stage. They're potentially up to CB, but we are finding that many of our investments are earlier than Series B. Series B is typically when a company has about 200 employees. and see this when they're very young indeed, less than 10 employees. When you look at the businesses on our top three, those are all very much at the seed end, and that's really where we've seen a significant growth in value, is backing those companies early, supporting them over time to create that value. We are backing long-term trends, and we see healthcare as an enduring an important theme, backed by demographics, aging population. It's driven by more and more complex healthcare needs, and then software is behind the digitalization, particularly around those large corporates that we look to as customers. And B2B is important. We do stay away from consumer-facing businesses. They are more volatile. They are more prone to economic cycles, and they are very prone to whether or not their brand is enduring or not. And we definitely wish to play in the B2B space. Next slide, please. ESG is important and very much part of what we do, and we are looking to deliver our return within the context of how do we develop sustainable long-term strategies for our portfolio companies. A company that is looking to be sustainable will grow value over time, and that longevity is important to the type of return we're looking for, which is very long-term in its nature. And we do that by thinking about ESG when we're investing, looking at how we can work with those companies to improve their approach to ESG, and then importantly, making sure the companies are well positioned when they are bought by large corporates who themselves will have very sophisticated ESG strategies. And through that, we are reporting annually on our portfolio in this respect to people like the UN PRI, to whom we are signatories. Next slide, please. As you'd expect, we think about this at Albion. So this is Albion as the manager as opposed to the portfolio. And we've got various initiatives. I'll just pick on a few, but we are looking to move our own business to net zero, and that's by offsetting some of our carbon footprint, but also looking to reduce it. And then we think about how our own business operates, making sure that we are inclusive in how we recruit, and looking to ensure that everybody feels included in how we operate, and that our policies are consistent with encouraging diversity within the broader team. And then alongside that, we have a charitable giving strategy where throughout the year we undertake initiatives to support our chosen charity, which is WizKids. And for those of you who don't know WizKids, it's a fantastic charity that makes the lives of disabled children materially better by providing the equipment that they wouldn't otherwise able to provide, whether that be wheelchairs, but also lots of other very sophisticated equipment that can make a real difference. And then in terms of governance, as you would expect, we are a fund manager managing public funds. So we are very focused on governance generally and within our portfolios. And in that regard, we report to the board of your VCT on a regular basis as to how that is progressing. Next slide, please. So moving on to the prospects, and I'll talk about the first quarter in a moment. But as I've sort of alluded to earlier things, it does feel like we are heading out of or starting to move away from some of the more challenging environment we've been in. I think interest rates will come down. Inflation is clearly coming down, albeit bits of inflation are quite sticky, even if the headline has come down. But what we are absolutely clear about is our strategy stays the same. We want a well-balanced portfolio, and that's across both the sectors and maturity. And we want to make sure that we're backing companies whose products are mission critical to those customers that are buying them, such that they will sign long-term contracts and remain customers for many years. We've talked about avoiding direct consumer exposure, but importantly, this VCT has good cash levels, which means we are well placed to capitalize on the opportunities that we are seeing, and the investment rate, which has increased in the first half of this year. Moving to the next slide. Very quick plug for electronic voting. The board is very keen to encourage shareholders to participate in the running of their businesses through voting. So as we will be moving on to a moment, these are the AGM resolutions. We have been working hard to make voting as easy as possible. And for those of you that are signed up to electronic communications, you should now receive emails which literally allow you to click through to a voting portal with all the information you need. And indeed, you can do it from a mobile phone. That's an easy way of doing it, but not the only. You can also go directly to the relevant website, the address of which is here, investorcentre.co.uk eProxy. And you can also do it today, as Ben talked you through, directly on the platform. So lots of ways of voting. The board is very, and indeed Albion are very keen to encourage that more engagement through voting. So little plug from me. Next slide, please. So looking at the first quarter, and we've just announced our IMS before this meeting. So we've seen continued progress in the first quarter. So that's the quarter to March, 31st March 2024. And we've seen a 2.86% return for the quarter, which is good progress against our 5% dividend target for the year. Now that's an important driver of that, and as we have announced to shareholders, this is on the back of progressing through the sale of Egress, one of our top 3 companies, where the exit has been agreed, although as we have said, that was subject to customary closing and conditions and regulatory approvals. But good news to see that moving forward, but it has still got to be the completion, which is still going to be formally finalised. We will be having a shareholder seminar. This has been a big success over the current years. It is face to face, and we very much encourage people to join us at number 11 Cavendish Square, and that's on the 20th of November 2024. These events are popular, so please, if you are able to join us and would like to do so, please could you drop a line to info@albion.capital so that we can reserve your place while they are available. We've announced the first dividend for the year in line with our 5% policy of 2.22p. That will be paid on the 31st of May. And just as an update on where we are on the top 3 investments, they now sit at 34.1% of the NAV. So hopefully that gives you a flavour of what's happened since the year end, and hopefully you, like I, will be encouraged by the further improvements in our NAV and results. And on that note, I will be handing back to Ben, who's going to chair the Q&A session. And so, Ben, over to you.
Thanks, Will. And thank you for that presentation. That was great. So we're now, as Will indicated, moving to the Q&A element of the AGM. Before we start that, I'd just like to point out that we often have a number of shareholder queries throughout the year. And whilst we do our absolute best to answer any substantive questions, I'm sure shareholders will appreciate that given this fund alone has an investor base numbering almost 10,000 shareholders, we're constrained by our resources to deal with every single specific query we receive. So looking at the specific questions that have come in during this meeting, okay, so can we have the first question, please, that come onto the slide? Just asking our tech team if they can put on the first question.
So Ben, let me read them out for you. So first one is why is the company continuing to hold virtual AGMs?
Okay, shall I say that one?
Yep, I think so.
Yeah, okay. I mean, look, this is one that does come up since we started to undertake virtual AGMs. And I do fully appreciate why some prefer AGMs to be held in person. It's certainly much easier for me as chairman to interact with people I can see and talk to. And I think that there is a lot to be said for that. Having said that, we do get much greater engagement through the virtual AGMs. We get much greater depth of engagement from our entire shareholder base. It provides the opportunity for people to consider it, to attend, and fit it into their work day. People can look at it later if the actual timing doesn't work perfectly for them. And it also saves your money. It is a very efficient way to deal with things and to provide the maximum amount of information to you all, and the maximum amount of interaction with the greatest amount of you in the most efficient way. Clearly, there are still some advantages to in-person meetings, but I think overall, for the majority of our shareholders, this is working extremely well. I make no apology to repeat Will's plug, which is we would be delighted to see as many of you as possible on the 20th of November for the shareholder seminar. That is a really good opportunity for interaction with all of you. And Will and I would both say anybody who can make that time, we would be delighted to see you. Sorry, Will, I'm still relying on you for
that's absolutely fine. So the second question, I think you're going to point straight back at me, but let me raise it. It says, please explain your approach to valuations of the unquoted portfolio.
Yeah, more appropriately dealt with by you, Will, I think.
Yes, absolutely. So look at as you'd expect, there is a pretty rigorous valuation process that takes place. And just to remind everybody, the full portfolio is valued on a quarterly basis, and every portfolio company is looked at four times a year. And if there was any material change in between, we would look at it again. The basic principle, as we say in the annual accounts, is that the methodology we use is the guidelines known as the International Private Equity and Venture Capital Valuation Guidelines. So that is a well rehearsed methodology used across multiple investment managers when looking at unquoted. So its objective is to ensure that we hold our investments at an appropriate fair value. Those guidelines form the basis of how we do that. We do it quarterly, and the auditors review them as part of the annual review process.
Great, thanks, Will. And again, is there more questions have come through during the meeting?
Yes. The next question is around do we have any idea of how Labour think about VCTs in the context that we are in the middle of an election?
Okay, well, given your incredibly intense involvement in the whole sunset clause discussions, and your closeness to the corridors of power, Will, perhaps you're best to answer that one.
Yes, no, absolutely. So, firstly, as you'd expect, we are heavily involved in ensuring that both government and Treasury, who are important stakeholders for VCTs, understand what we do and making sure that what we do fulfills the public policy, and that is an ongoing exercise which has been alluded to. Something I've have been very involved in. In terms of looking specifically at the Labour Party, the engagement to date has been around their own work, and they produced what was quite an interesting report called the Labour Startup Review last year, and we were involved in sort of contributing to that. And whilst it's not policy, it is recommendations of policy that the Labour Party might look to do it. And I was very encouraged by how supportive they were of the whole area of young startup companies, particularly those that show great innovation and can create economic growth through jobs. I'm very, I think, to answer this question specifically, in that in that report, they both called for the continuation of the VCT scheme, and in the context of the sunset clause, they called for that to be extended, which, as you all know, will. The most recent manifesto has a short paragraph where they talk about continuing to support startup companies and make reference to companies that are particularly innovative or have high levels of R&D. So certainly all indications are, and certainly my interactions, and I think I've said this before, is we're in a position where both sides of the political divide are supportive of growth. They're supportive of what VCTs can do to contribute to that growth. But clearly what we don't have is any detailed policy around that. But certainly the indications I would consider to be positive.
And certainly will, in terms of the mood music. I mean, we are on the side of the angels. Our investments in our portfolios, our portfolio companies themselves, are exactly what both major parties had wanted the various VCT reliefs to be aimed at. So in terms of encouraging that kind of investment, it's firmly kind of in the space of both political parties saying this is where we want to prioritise investment. I mean, it's looking probably better than any time in the last 10 years on that front, really.
Great. Ben, let me give the next questions come through, which I think is definitely one for you. Why did the board consider it appropriate to increase fundraising fees on last year's top-up offer to 3%?
Yeah. Okay. Thanks, Will. So it was an increase, but with actually very good reasons. I mean, so firstly, just on a benchmarking, when we as a board benchmarked it, the fees for these things across the industry are generally somewhere between 3 and 5.5%. So we're very much at the lowest end of that, and it is we do take the approach that it is not a place where profit is sought. It is essentially looking to be done on a neutral basis. And here, because the decision was made to outsource quite a lot of the kind of cost, that is kind of direct costs that needs to be paid, and there is just no profit element to it. It is just cost that is intrinsic to outsourcing such a process. So we're at the lower end of the kind of benchmarking range. It's direct cost. There's no profit intended to be made from it. And I think we as a board were very comfortable that was delivering actually very, very good shareholder value.
Brilliant. I think the last one that I've got at the moment is. So I think we may have done all of them. Is there any more coming through? No, I think then, unless there's any on your screen, I think we're there.
Very good. Okay, well, if that is all the questions that have come through during the meeting, then we can now continue with the formal business of the AGM. And obviously, apologies, this is by definition a little dry. So the full text of each of the resolutions was set out in the notice of the meeting, and the board is recommending that members vote in favour of all the resolutions. I will briefly summarise this. The first resolution is to receive and adopt the company's accounts for the year ended 31st of December 2023, together with the strategic report and the reports of the directors and auditor. The second resolution is to approve the directors' remuneration report for the year ended 31st of December 2023. The third resolution is my own re-election as a director of the company. The fourth resolution is the re-election of Lynn Golby as a director of the company. The fifth resolution is the re-election of Lord O'Shaughnessy as director of the company. The sixth resolution is the re-election of Patrick Reeve as a director of the company. The seventh resolution is the appointment of Johnson Carmichael as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the accounts are to be laid. The eighth resolution is to authorise the directors to agree the auditor's remuneration. The 9th resolution is to allow the directors to allot shares. The 10th resolution is a special resolution to give the directors the power to disapply pre-emption rights. The final resolution is again a special resolution, which is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. Sorry, I apologise, there is one final resolution, which is to provide the company with the option to provide a 14-day notice period for a general meeting, should this be necessary. The results of the voting, including the proxy votes on each of the resolutions, will be announced after the AGM through a regulatory information service announcement. Additionally, the results will be published on Albion Capital's website as soon as reasonably practicable. I confirm that the voting has now finished, and I now declare the poll closed. In the meantime, I will show on the screen the current proxy votes that have been received by the registrar. As you will note, the proxy votes are comfortably in favour of all of the proposed resolutions. Thank you. That concludes the business of the AGM. I would like to thank all members who have joined this AGM by webcast. The board really does welcome any feedback you may have, which you can now do by sending an email to aadvchair@albion.capital. I will now formally close the AGM, and on behalf of all of the board, thank you for joining the company's AGM. Thank you.